Obviously, they're still having arguments inside. Who knows what they say behind closed doors over at the Fed. There are some that say, you're getting way too far ahead, way too behind. Can you weigh in on this? And then we'll get to the stock market itself.
Yes, I think that the Fed is a little surprised because the economy isn't growing according to its playbook. It had been looking for a very, very gradual increase in the economy, inflation very gradual, and here we are with the economy growing above its 1 3/4, 2% long-term growth, and unemployment below 4%. So I think the Fed is quite surprised how quickly the economy has bounced back. So they're beginning to have a debate within themselves. Should they be more aggressive than their very, very slow, passive plan that they've had in place for the last couple years?
Margaret, getting back to the markets, you say you think that the markets could surprise more to the upside going into the second half of the year, given what you say is an underappreciation of the strength of the U.S. economy.
Yes, because I don't think these moves in interest rates with the 10-year, actually the whole curve more or less around 3%, is all that important with inflation around 2%. I think that we're likely to see the economy accelerate. Usually the first quarter is the lowest growth quarter, then the economy accelerates through the rest of the year. I expect that to come into play. And I think really over the last few years, too many investors have been positioned as if growth would be very slow, as if we may go back into recession. In other words, sort of replaying the scenario of 08, 09 in their heads rather than looking at some of the very optimistic data in the U.S. economy.
Okay, so it sounds like you're definitely in one of these. You're one of the people in the real interest rate camp, not fixated just on a nominal rate for the Fed funds rate. What would you be doing right now to rejig? What would you take profits on? What has paid off for you? What has underperformed that you think might have potential well into second quarter, maybe into the second half of the year?
I think the economically sensitive and the growth stock sectors of the economy are going to continue to do well. People keep looking for the turn to value stocks, low growth sectors like consumer staples. I don't think it's going to happen this year. So I'm overweight in the technology sector, in the healthcare sector, tools and devices, in industrial companies because they'll benefit from the increase in capital expenditures. In other words, more or less staying with the same themes that have worked for the last couple of years, looking at economic growth to continue.